the state of GameStop. Well, first off, I don't know the last time I've done a public video. You guys probably know this already, but I do daily videos every day for Discord members. But I want to do a public video on GME to try and, I guess, portray my thoughts. And there's no face cam in this video because I'm not in Los Angeles right now, so I don't have my recording gear with me. So the audio might be kind of bad. I'm probably not really gonna do snippets or anything. Just it doesn't matter, right? And so what I want to do in this video, which hopefully will be relatively short, I just want to share my current thoughts, possibilities for where price can go in the next couple of months, weeks, days, whatever, and just give my overall thoughts because I feel like it's been a while since I've really spoke publicly about it. I mean, I'm not as vocal publicly as I feel like I used to be, and there's not really a reason for that. I just like, move in silence. And yeah, so I'll pull up my count here, and I'll pick it apart for you guys so you can have a general idea of what I think it means. I will say I was very thrown off when we did lose the 22 low. Not to say it wasn't necessarily expected, but I mean, because I was positioned to take advantage of an IV crush on earnings. So when this happened, I made money on short calls and puts, which was nice, but grand scheme of things, it's still fucking annoying as shit. And so, just trying to outlay possibilities here. If this is correct, as I've stated before, the longer term invalidation levels are, I think they're on this chart, are 19.44 and 18.88. But if we lose 19.44, there's a pretty high likelihood we're going to come lower than that anyways, because the reason for that is, if we go back to here, the low of this impulse wave starting on the date was, let's see, May 12th, right? We first had the five swing up. We had 1, 2, 3, 4, 5 into 1. We count ABC into A, ABC into B, 1, 2, 3, 4. And we're looking to see, I mean, this is a possibility for, the final leg down. A possibility. And I say that because I was very, very confident in 22 marking the low, and obviously that didn't quite hold, but while that count is not invalidated, we're getting closer and closer to it every day. And I feel like I've matured, and I'd never advocate for buying GME calls, especially after I totally fucking burned myself. I think it was like around here, I put 20 grand on weeklies, got clapped, and then a week later I watched my position that would have been worth millions. And so I don't really do it anymore. Insert the meme of when gamblers quit gambling. But if this is correct, we have a supposed bounce. I'm just going to show you how I draw the levels. We have a bounce target setting itself up at, I believe it's 19.79. On here it says it's 0.81, but I can draw, the correct way to draw it would be from taking the actual low that was set in the after hours session, which was a tiny bit lower. So that puts the bounce target at 19.79. And mind you, this is still, about 35 cents away from invalidation. So if it takes 19.79 and doesn't come to 19.44, we can call it a potential bottom. The issue I have is it's a very weird, wonky way of counting this down. And the reason I have these little triangles drawn is, from a structure point of view, obviously I'm probably not the first person to say this, but I also don't really look at what other GME people are saying, because it's usually just noise, and I like to just stick to my own gut and not really be swayed by anyone else's judgment or opinions. Call me crazy, but it looks like the same thing. And so setting up a potential bottom would put it at 19.79. And, just from like looking at daily candles, this does not look good. Sure, we did have a 1% close, 1% green close on Friday, but, we did break down underneath this trend line that held a support. And now, it looks like tomorrow we're going to get some sort of maybe a little pop to the upside, but realistically, it's probably coming down to this 19.79 at the minimum. And so, I can't really talk huge upside targets yet because, we haven't bought them. But let's assume it gets 19.79, and we can kind of draw hypotheticals here. 19.79 would take it up to a minimum of 38.79. We would expect 38.79 to like 50-ish, and that would be this 3 in orange. So I guess it would be like something like this, more or less. But this is kind of meaningless. You just have a line that goes up if there's no real supporting argument to it. And so before I can really say this is all going to happen, I need to see that we don't lose 19.44. Um, Bigger invalidation would be down here at 18.88, which was like the low that we hit when we originally called bottom down here, marked by this massive impulse wave to the upside. Um, but if that's lost, then obviously this isn't the bottom that we're playing off of anymore, and it completely changes the entire count. And so if we do get to that point, I guess another possibility that I would be watching for would be for a move down to, let's draw it, bear with me here. We need to use a 4-hour time frame because it went higher in the after hours, I remember. This was the news of a dividend up there, all the way down to here, and would expect a bottom at, I don't know, 16.44 if 18.88 is lost, but, this is just foreshadowing. There's no real way to know. What I really would have liked was, after we had this move up from earnings, would be for us to have held this 23.39. If we held this, I would be much more bullish, but obviously we did not. And, the rest is history. So, yeah, that's pretty much where I stand. It's been sucky and annoying, and I'm sure everyone feels the same way as me. I still hold a large position, and it's like, all I can really do at this point is dollar cost average. I am right on my 22 by now. Technically, I mean, if you count the premium I've collected from covered calls, I've been able to make money off the shares, so I'm still green on the overall capital deployment, but still, like, it's annoying. It's very annoying. But the structure we're looking at here is a potential ending diagonal for the fifth leg of this flat. And remember, a flat is going to be, I'll draw it out for you. All right, a flat is where you have A. In this case, it's expanding, so A is longer, or B is longer than A, and C is longer than B, which would have it look like this, more or less. And the subdivision within it would be, just so you can compare to the above image, would be A, B, C. You get another A, B, C like this into the B leg, and then you have 5 down for the C leg, right? Where you have 1, 2, 3, 4, and then 5. And so if if the above view is correct, we're basically at, this part of trend, like right here in the 4, or in the fifth leg, where it's not quite done, but we're very, very close. And this would be if it's correct. And mind you, the invalidation is like right there as well. So it does set up a relatively good risk to reward buy, but confidence isn't huge. I'm not going to lie. It's definitely not huge in calling a potential bottom after 22 fell through. And so, yeah, this is like the Spark Notes version, I guess. And I don't know. Hopefully you find this somewhat helpful. Obviously, I am retarded. No one knows anything, but it's it's a blessing and a curse to be able to at least like collect very consistent premium on this, but it doesn't make it any better. It's still pretty fucking annoying. But let's zoom out a little bit more. If we do lose 18.88, then it would change. I don't even want to draw it out. It's like so much work, and it's probably for nothing. So with that said, for this week, let's watch closely this 19.79 and 19.44 and 18.88, because if those are lost, then there isn't really much stopping it from going down to 16.4 or lower. And so we just got to stay diligent, and we shall, I guess we'll see, man. I don't really know. I'm putting the bulk of my attention on SPY in the broad market now, because that moves organically isn't the right word, but it moves at least, and there's arbitrage that to happen in either and every direction. And so by prioritizing that, it definitely offsets, dare I say, the burden of sitting on this and collecting premium. But still, what can you do? So hopefully this was somewhat helpful. I can't really say it's exciting until we come down and take 19.79. I would say not losing 19.44 and see a strong move up, because if we see that, then it gets interesting, potentially. But if that doesn't happen, then I'm indifferent, and I'll kind of just like sit on it, and I guess just buy more the lower it goes. So, yeah, man. Don't think there's anything much else to say. I guess briefly I can pull up SPY, because, obviously I'm a bear on SPY, and I totally nailed the 411 rejection. But now it's a matter of, the downside continuation. But if we're projecting this on SPY, it doesn't really, obviously, you have your negative beta, but, market was getting more or less clapped here as well. Like when GME got clapped, so did this was the market there as well. So I mean, it's, I don't know, take from that what you will. Hopefully this was somewhat helpful. I'm on the East Coast now, so maybe I'll be more active on Twitter this week, but no promises.